Good day, everybody. Welcome to the Deal Scout. On today's show, we're going to have a conversation about pre-IPO businesses and maybe the value that the opportunities are right under your nose. Guys, welcome to the show. We have Mike and Anthony. Guys, welcome.
Thank you for having us. Yeah, it's
All
great
right.
to be here.
All right. So, people listening in, if you're watching this on YouTube, you could obviously see a few different people. But if you're listening in on a podcast, there's going to be a few different voices. I'm Josh, I'm the host, but we're interviewing two people from the Pre-IPO Group. So, we have Anthony and Mike. So, Anthony, why don't you kick us off? Tell us a little bit about who you are and what is this group that you're working with?
Yeah, sure. So we have a company called the Pre-IPO Group, and we deal in the private sector. And basically, what we've done is we get access to companies. These are strong companies, mostly in the tech sector, and they're mostly in Silicon Valley. And we get access to equity in these companies, and then we're able to make that available to people who want to participate and maybe acquire that equity. There's a liquidity issue that happens with some of these startup companies where an employee or an ex-employee or somebody who worked for the company may have been compensated with stock options when a part of their package when they sign their contract to be employed. And what'll happen is they'll work in Silicon Valley. Maybe they started off and they were riding a skateboard to work. They just an engineer right out of Stanford or one of those big schools out in California. And what'll happen is they'll be with the company for a few years, and maybe they'll want to buy a home, or maybe they'll want to start a new business. And you live in Palo Alto, and the starter home is a couple $1,000,000. So you're not really going to be able to get there on your current salary. So this liquidity issue is something that we've been working on for just over 10 years, and being able to provide them with liquidity with their equity, and then making it available to people that want to participate. It's been a really fun project for us. It's obviously been a viable project for us, and it's a small niche out there. It's an alternative investment strategy that I think that we've been able to do really well with, and our members have done extremely well, and we're having fun doing it, which is the best part.
Very cool. Now, the voice you just heard, that's Anthony. Anthony, how the heck do you pronounce your last name?
Galella, yeah, I've heard it butchered over the years many times. So I actually coach football for a long time, so I'm known as Coach G. It's a lot easier. So yeah, but Galella is the last name. That's the pronunciation.
Very cool. All right, Coach G. And then on the other side of the table, we have Mike. So, Mike, tell us a little bit about who you are and your role with the group.
My name is Mike Classi, and I'm one of the marketing directors here at the Pre-IPO Group. And essentially, what I do is I look for people who want to get involved. Like Anthony said, making this stuff available for people who may not know about it. A lot of what I do is educating people, and that's why I'm thankful for you having us on this podcast, getting our voices out there, and in this long form discussion where we can talk about exactly what it is that we do and how it might make sense for someone to get involved. And we're excited to be on the cutting edge of technology here, and we pride ourselves on being pretty forward thinking and understanding big picture ideas before they come into play, before they become household names, or even if they are already household names. We're just very excited to be in such a booming industry, in such a dynamic market. And yeah, that's my story.
Very cool. All right. So what we'll do on this conversation is I'll go back and forth and ask you guys different questions. And let's start with you, Anthony. You're a founder of the company, and you've been doing this for a while. Why don't you give us, how did this come to be? Like, what was the spark that started this company? Give us the story.
Yeah, sure. So a little over 10 years ago, we were a partner of mine he was a big time money manager, and he had a client who was involved in Google. He was an employee of Google, and the client had reached out to him and said, there's this company out in Silicon Valley that they have some employees, and they're having kind of this issue where this company is really going to take off, but some of their employees would like to cash out on some of their equity ahead of time. Could we possibly create a vehicle that would facilitate that? And, at that time, the secondary market hadn't really been created at that point. So, they said, okay, maybe we'll go meet with the company. And if you tried to walk into that company now, there'd be probably security guards throwing you out. But back then it was Facebook, believe it or not. And at the time, which is so interesting, when we were talking to people, once we decided this was something we were going to move along with, and this was something we wanted to participate, when we would talk to investors and prospects, when we talk to them about Facebook, everybody would look at us like we were crazy. They say, hey, that sounds like MySpace. Like, how's that ever going to make any money? So being in our industry naturally with tech, and that's happened throughout the years. I can give several examples, but it's always, that's the fun part actually, is there's always going to be a learning curve for society when it comes to new technology that's out there. I mean, before anybody ever took a ride in an Uber, I knew what it was, probably two years prior to that, because we had taken a position where we believed in the company, we understood that. And again, people would be like, well, how is that going to be better than a cab service? Who's just going to get into a random person's car? So when you're on that side of tech and that side of history, it makes the story really, really cool. Obviously, we're involved in finance, and we're always looking to do well when it comes to making a profit and return on investments and things like that. But I think the story behind it was what's so interesting. It's having the faith and the foresight to say, hey, these companies make a lot of sense. And, we can see where they're going to be a disruptor in their field. So if we can take advantage of a situation where we're able to acquire equity at a discount to where it's going to eventually trade in an IPO, there's different ways companies can have liquidity events. IPO is the one everybody really knows about. It's traditional, the traditional public offering. But there's things like acquisitions and reverse mergers, and SPACs have become a big deal. So there's different forms for these companies to have liquidity events. So our whole fundamentals are based on access. What can we actually get our hands on, right? We got to do our homework, but what can we actually get our hands on? Discount, what are we willing to pay for it? And then timing, can we move in such a way as to take advantage of these situations? And starting back with Facebook, that was the the way we were able to do that. We were able to say, okay, this company is a way out. If you talk to Mark Zuckerberg at that time, and I didn't speak with him personally, but if you had ever seen anything he had said publicly, Facebook was never going public. So here we are trying to explain to people that this is the future. This is going to be a great investment. And then you have, the CEO saying, never going public, we'll stay private as long as possible. So it was a very interesting time to really kind of, build people into our line of thinking. But, we believed in it enough. We knew where it was going to go. And we've had tremendous results over the years. I know I'm dating myself talking about a company that went public 10 years ago, but we've been doing this since, and we've had great success with companies like Airbnb was a great success for us this past year. And so was Snowflake. Snowflake was the largest tech IPO in history. So having the foresight to be able to get involved, actually being able to get access, it's pretty an exclusive group that gets access to these things. And then being able to move in such a way that you can put the odds in your favor when it comes to the investment, the stock market. The stock market itself is so volatile, and you can certainly make money if you're really skilled at doing those things. And we're just a little bit different of a type of investment strategy. Like I said, it's an alternative investment strategy, and we've done quite well with it. You have to be super selective with the companies that you want to get behind, because when it doesn't work out, it's a reflection of your diligence. But we have a really strong team of advisors that helps us in this area, and those relationships that we've built over the past decade in Silicon Valley have really guided us the right way.
Yeah. Now you talk about foresight, right? Like growing up, I just turned 40, right? So I grew up with this kind of direction from mom and dad. Never get in a stranger's car, never go into a stranger's house. And now we have Uber where we're getting in strangers' cars, and Airbnb going into strangers' houses. How did you have the foresight? How did you guys have the foresight to see that it's going to buck up against my mom's, conventional wisdom and direction and turn into billion-dollar businesses? How did you guys see that?
Well, the world is ever changing, right? And certain things become norms almost overnight. And if you look at the last couple of years, the pandemic times, we'll refer to them as, right? That truly created a shift in a lot of ways that things were done. People didn't want to go stay at Hilton's. They would rather book an Airbnb and, take comfort in the fact that someone would have hired a cleaning service and that things would be a little bit more private and, take advantage of that aspect. And to us, that, again, it just made so much sense because we're able to see things from a different perspective. And we're not just looking at it from a numbers standpoint. It's what makes sense. If you can stay at a gorgeous house in Miami Beach on the water for the same price as, the Fontainebleau, which one would you choose? And if making that option for the house is available, then I think there's going to be a market for that. And being observant and paying attention to what trends are and what people really want and being able to capitalize on it, really creates a unique opportunity for investors and for ourselves.
Yeah. So, Mike, one of your roles and responsibilities is to educate the community on potential, opportunities, right? Like here, you could do commercial real estate investing. You could invest in the public industry, right, in NASDAQ, or you could invest in private businesses pre-IPO, right, in at these stages, tech companies, that are going to do hopefully some amazing things. How do you guys approach, and Mike, how do you guys approach education? How do you approach, working with investors? Like give us an idea of what things look like to work with a group like yours.
So it all starts with making a friend, right? We want to establish trust with people, and we want to get them to understand that this can be a portion of what they're allocating to, to put their investment dollars towards. We don't tell people you should pull out of the public market or, not embark on a real estate project, but simply offer this as another vehicle, another avenue in which someone can really capitalize on a unique time window and get involved at a point that makes sense, where it's not necessarily a short-term investment nor a long-term. It's somewhere right in the middle, and it really varies by what companies you get involved with. And I think the more and more people understand what this is, they start to get it. A lot of people like to just observe and just say, hey, you know what, I might pass on this one, but let's stay in contact. You told me about company X, Y, or Z. Well, I'm going to look out for news on them. I'm going to see how their IPO does, so on and so forth. So a lot of it is understanding patience, and understanding people's, I don't want to use the word ignorance because that seems degrading, but when you're unaware of, or you haven't been exposed to a different strategy, you're going to have your questions. You're going to have your reservations, and rightfully so. We encourage people to do their due diligence as we do ours. And there's a lot of thought and effort that goes into these deals. But eventually just getting people on the same page and bringing them up to speed on how everything works and how it can benefit them. Ultimately, people will make the decision that they want to make, and we're just going to present the best options that we have for them.
Yeah, and I have a podcast show and I talk to deal makers all day, but I don't know what I don't know, right? There is this blank space of stuff that I'm not even aware of, right? In technology and stuff that's going on in blockchain and crypto and NFTs and some of the stuff I just have no freaking clue what it is. So, like for me, and I think that me and other investors and other people have this kind of mindset. If I have money, deals will show up. But that is not the case, right? You have to have access to good deals. So, Mike, I'm sorry, Anthony, when it comes to access to good deals, like for a guy like me who has these blank spaces of, I'm just not aware of certain types of deals. How do you find deals? How do you guys come across good deals? And then how do you present that to me, where a guy like I have no freaking clue what some of this means? Like how does that process work? Because I'm sure you're working with a lot of people like me.
Yeah. So I think one of the things that we've found is educating people on the actual model of that it exists. Pre-IPO, most people don't understand what that means. They hear IPO and they know initial public offering. If you want to participate in an IPO, your name better be Warren Buffett or Goldman Sachs, because only the large institutions are really going to get access at the IPO pricing point. And then it's going to have its first trade. So the average investor, anybody who else, that wants to get involved, and they say, hey, Airbnb is going to have their IPO. I would like to own that company. I'm going to buy them when they have their IPO. And maybe the IPO goes tremendous. Maybe it doesn't. It depends. Every company is different. So normally what happens with an IPO is that the institutions get involved right prior to the offering. They buy up the float of shares that they're willing to back, and then after that, it gets priced even higher for the general public to become involved. What we're able to do in the pre-IPO space is get involved at an institutional level prior to that whole process, and usually at a steep discount to where that's going to eventually be priced. I'll use Snowflake, for example. So Snowflake was a company that, like I said, they were the largest tech IPO in history. And it was a company that I believe they were pricing at the 142 range, right around 142. Its first trade, I'm sorry, they were pricing it at 120, and their first trade was 242. So somewhere between 120, where Warren Buffett got involved, and 242, a lot of people made a lot of money. Then it comes to the market at 242. We had been able to get involved at a fraction of that price 6 months prior to it. And that enabled our investors, ourselves, to make a multiple on our investment in turn. But people understanding the difference between pre-IPO and IPO has been our biggest goal, is educating people on this is actually what's happening. This is this is how the process works. And that, I think, is our biggest goal right now. And our biggest objective is to educate about how it works, because for someone who doesn't know how it works, it's what am I jumping into? Obviously I'm going to have some faith when it comes to investing, because that's what it is. It's investing. It's not called money making, where every time it always works out. So you want to do your diligence. You want to make sure that you're really, really looking at, these and trying to get the best possible understanding before you get involved. So it's our job to paint that picture and to really detail it out, so that people can have an idea. Okay, this is how it works. I understand how it works. Now I can go and say, hey, does it make sense for me to, put some of my assets into this?
And like Anthony said, understanding the model of how it works, the companies will be interchangeable, right? There's many IPOs each year. And just being able to understand that, based on our history and based on our track record, we are able to kind of explain things in a way that works out very similarly, no matter what the company is. The process is typically the same. And of course, there are other variables like the method by which they have their liquidity event, if it's a traditional IPO or a SPAC or a merger, et cetera. The general model stays the same, which is nice, because people that have done this in the past will come back and do it again because they understand how it worked the first time or the second time. And that gives us a good opportunity to build a relationship.
Yeah. So Anthony, how do you you might not let us fully in behind the kimono, but how do you find these deals, right? Like, how do you find these opportunities where, right before Warren Buffett, like give us a little bit.
Yeah. So
how do you find these?
I'm definitely we're not finding it before him. We're definitely, not making the claim that I have, a secret over Warren Buffett, but, over the years, doing business with different companies and getting involved with this, you make a lot of connections and you make a lot of relationships. And a lot of times it could be coming down to following smart money. Peter Thiel was an early investor in Facebook. So, when we get involved in a company like Facebook, and then, okay, well, Peter Thiel is also involved in a company like Palantir Technologies, or, and you start hearing these names that come about. And then you start saying, okay, well, really knows what he's doing. Maybe this is something we should look into. And then you start looking at the technology and then the problems that they're solving. And every company that we're dealing with is pretty much a disruptor in its space. So when you realize, the issues that are out there, what they're solving, and the potential of the company, that's how you can kind of start to weed through which ones are going to make sense. And listen, I'm sure there's times when we miss out on companies, and then there's times when, we also get it right. But we're very selective on what we'll get involved with. We only take on a few projects a year because, to be honest, in our industry, our money's where our mouth is. I mean, we get involved with these companies, and if they don't work out, they don't work out for us. They don't work out for anybody. And to be honest, we're really not we're not financial advisors. We're people that have access to something that is very, very unique. And what we do is we refer business over to funds that have, these types of, vehicles set up to participate. So for us, it's about educating ourselves and then educating everybody else on what makes sense. And then we go from there.
Got it. What kind of vehicle do you use to do a pre-IPO deal, right? So you got a private company like mine, probably not a fit. We're not there yet. Maybe one day, right? But like, what kind of vehicle do you use? Like, what do you guys look for? What are some of the building blocks that must be in place for a deal like this to work?
Sure. Yeah, it starts with their leadership team. You're always going to look at who their leadership team is, who's running the company, and then you look at funding rounds and who's been involved. Right. So we're not getting involved at the angel level or the seed level where companies, they could work out, they could not work out. We're getting more later stage companies that are on the path to profitability or they're profitable. And when you start seeing these boxes being checked, then it starts making sense. Okay, this is a company that has the potential to fit what we're looking to do. So I think for us, it's good fundamentals, strong leadership team, and again, who's behind it? What in those funding rounds that have occurred, who are the people that are getting involved? And like I said, sometimes it's just following the smart money, and then sometimes you really just see an opportunity. It makes sense, so you go after it.
Got it. All right. So we locate a target company, right? We're like, man, they're on their series, right? They're a private company. They're doing well. Smart money's involved. Great investors. It looks like they're on path for great profitability. So we go knock on their door and ask them for shares. Like, how does the
Yeah.
mechanics of that work?
The security guards will throw you out.
Yeah, right.
That's not going to happen. These companies all have some type of internal system set up now, but they work with law firms that represent these clients. And basically, when an employee would like to liquidate part of his equity, he's going to go to his company, and there's something called a ROFR period, which is the right of first refusal, and the company can bless the transaction or they could not. So we're going to look for those opportunities, obviously, where the company is going through the ROFR period. So from there, it's all, like I said, it's all done through law firms that represent the sellers and the company, the issuing companies. And then we would contract out with those law firms. And then at that point, the equity, once it's contracted out, is sent over and then held in a fund. Yeah.
Very cool. All right. So as you guys are doing this, what happens if we buy someone else's equity, right? So the guy who's riding the skateboard, he's like, hey, it's time for me to buy a house in Palo Alto. I'm like, I'd buy your equity on Facebook, right? So I buy his equity, pre-IPO. What happens if Facebook didn't go public and I'm sitting here with shares of the private company? How does that work? What kind of liquidity issues could happen if they don't go public, SPAC, merger, fill in the blank?
Yeah. So it's really important to identify situations where they're going to have a liquidity event at some point.
Right.
And some of the key factors for that are, well, there's several criteria that can be met, but something as how much money have they borrowed over time? When a company borrows, couple billion dollars, they have to pay that back at some point. So they're going to have a liquidity event at some point. And by getting involved when the companies are a little bit more later stage, you realize if they're on the path to make that happen. Whether they're going to be profitable, or maybe profitability doesn't always have to be this, the same thing. And Amazon wasn't profitable for like
72 quarters.
72 quarters. Like that. So it really depends on, it's not a guessing game, but you really just have to have strong fundamentals when you're looking at it. And you have to have, super sharp focus and say, is this something that can happen? And what's their timeline? It's not it's more of an art than a science. Okay. I will say that. Because when the company's private, they're private. Their financials are not always available. There's not everything that it's not as transparent. So you really have to understand, and you have to rely on the relationships that we've built over the years to know that we're headed down the right path.
Yeah. Now, when it comes to the offer, right? So we found a target. We're having conversations, through the the correct channels, and it comes time for the offer. How do you guys approach valuation? Is it based on the last raise? Is it based on the next raise? Is it based on revenues? How do you guys look at that?
Yeah, so there's a couple different factors. Well, these companies will do internal audits because when you offer someone stock options and it's an employee, you have to tell them what it's worth. I can't just say I'm giving you 100,000 shares of XYZ company, because that's got to be worth something at that point. So these internal audits certainly help when it comes to that. It could be a funding round, a recent funding round, that company participated in, and you see where the valuation is. There's several factors. Those are just two. I think of a company like we're working on Triller right now. This is actually in my opinion, it's a really neat project, because when we first started in the beginning of the year talking to people about Triller, they're like, that's the TikTok rival. Why would you want to get involved with that company? TikTok is obviously the major player. And then you start looking at things like that TikTok is banned in companies like India, and Triller has a $40 million user fan base that daily is using them. They haven't spent $1 in India, in marketing, so you start looking at things like that. And then you look at the valuation of the company that you're able to, get them, access to. And does that make sense? Like where the company is projecting. And we were lucky to do that very early in the beginning of the year. We had the foresight to get involved with Triller. They just completed a funding round over the last few weeks that valued them over double where we got involved. But we saw the potential in the company. We saw the growth. We saw all the different, artists that are behind it. Their goal is to have the biggest, basically creative IPO in history. So you look at some of these situations, you say, hey, is there a possibility for us to get an advantage here? And that's when we decide if it makes sense for us.
Yeah. So Mike, your job in marketing, business development, and, education, right? Like you coming onto the team, Anthony built this and he's been doing this for a really long time. And you're catching up, right? In terms of experience and all these other cool things that you're learning. What was the biggest like mindset shift from, maybe from past education or perceptions to now working with a group that does this? Like, what was the biggest like aha moment for you that you saw?
I think the dynamic nature of what it is that we do. When I first started here, I was learning under Anthony, and just by sitting in and listening to his verbiage, listening to how he communicated effectively over the phone, things like that were really positively shifted my mindset. I came from a background totally unrelated to finance or tech. In college, I studied exercise science and psychology. And after I graduated, I was working as a personal trainer for a lifetime. And so I was involved in sales to some degree. I was involved in, creating interpersonal relationships. But for this, it was a totally different animal because of the nature of how things moved in this business. We don't always have the luxury of having a company or access to a company at any given time. There's times where, there's no more shares to be had. There's no more equity to be purchased. So creating this almost ticking clock in your head, knowing that you have to show up every day and make sure that you talk to who you need to talk to and get everybody on the same page, because tomorrow we don't know what that might bring. And like we were talking about before the show, every day presents a new set of challenges, right? So it could be something as simple as just a connectivity issue, or so just being in such a highly dynamic work environment kind of shifted my whole perspective on what can be done in a full 24 hours and what can be done over a week, month, and a year.
Yeah. Now, I'm a deal guy. I like deals. I'm a fan of big deals too, right? Because sometimes you do just as much work for a big deal as a small deal. And you mentioned that you guys only might do a few deals a year, right? So each deal is vital, that you guys find the right deal and that you're investing time, energy, and resources in that. So Mike, what do you look for as red flags for a deal where you're going like, let's get out sooner than later. Let's turn this down in your due diligence process. What are some red flags for you?
Some red flags for
I'm sorry, I meant Anthony. Anthony, red flags before you guys write a check and buy equity from a business. What are some red flags that you're like, ooh, that's a no? Let's get out of there.
Yeah. Usually it'll have to do with timeline. the company's timeline, a lot of it has to do with the leadership team, to be honest with you, who's actually running the company. And sometimes you just have to trust your gut in these situations. When it feels right, it feels right. And when it doesn't, it doesn't. So not to sound so barbaric about it, but to be honest, that's really where you're going with it. When you can look at certain companies and you either believe in what's going to go on with their future, because you got to be all in on these things. You have to really kind of get behind it. If you're going to do it, then you should do it, and you should believe in it completely. So when you have that gut feeling, that maybe there's something that's just kind of missing. Maybe this is a time to just kind of maybe pass for now. I think that it's really important to trust that gut feeling when it comes to it. It's not always a numbers thing. It usually has to do, like I said, with the leadership team or the direction that the company maybe, going as far as you think they're going anyway. And I think you have to trust that.
All right. So Anthony, you, me, Mike, we're going out for a cup of coffee, and we're meeting with the founder team, and we're getting ready to invest. But we want to have one last meeting. And Anthony, you get to sit across the table from a founder, maybe the founding team, maybe person in their co-founder, and you get to ask one question, right? So all the normal questions about business have been asked. What's your revenue? What's your projections? Blah 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 blah. You get to ask a question. What's one of your favorite questions to ask a founder that will either turn a yes or no? Everything else checks out.
What's the first thing you did when you woke up this morning, the first 5 minutes? It's a really interesting question, to be honest with you. That first 5 minutes, and I've heard so many different people talk about it, but really super successful people in that first 5 minutes will do something they love. They've conditioned their mind to do something that's going to really jumpstart their day and start off. I want to know about their mentality, their outlook on life. How are they passionate? Do they live with a purpose? So that first 5 minutes says a lot about somebody. Are they the type of person that hits the snooze button? Are they the type of person that gets up, jumps in a cold shower to shake up their body and then goes to work? I want to know that. So if I can ask that question, I know maybe it sounds a little weird, but you know what? It actually tells a lot about a person.
Yeah. All right. And then, Mike, what question would you ask that you're like, all the numbers, all that stuff he asked the first 5 minutes, and then you get to ask a question. What question would you ask the founder?
You expect me to top that question?
No.
No, I similar to what Anthony was saying, like I would ask them something along the lines of what they do outside of that company that makes them human, right? Like Anthony mentioned, we're relying on a lot of our human element here to understand and to trust our gut. So what makes them a trustworthy person? What makes them more like me? And why would their product or their idea be something that people like myself or like you and I, why would we get behind it? What appeals to us from that?
Interesting. All right. So, Anthony, since you only do a few deals a year, right? So it's really important to get the right deal, to do the right, give us an idea on deal size, right? Like if we're doing, if we're working on a deal, what deal's too small for you guys to work on? What's like the sweet spot for you guys?
Yeah, so it's not a matter of too small. It's usually a matter of what's available. Okay, what can you actually access? How much can we get of that company and at what price? And does that make sense to do that? Do we have the appetite from our member base to quantify that and to make it work? So we'll buy blocks of stock. Very common for us to buy equity in 20, 30, $40 million blocks, depending on the company and the appetite, like I said, and what's available. Some companies more availability than others. So, and then certain companies, SpaceX is a company that there's one fund in the entire country that works on SpaceX. So like whenever anything comes available, if you can get your hands on it, you may want to do that one, for multiple reasons. But, we've recently been working on a company called OpenSea, which you may have heard of. If you're familiar with the NFT space, which everybody, I don't care who they are in the world, besides the people that created this, are still trying to figure out what NFTs are. But, and I've heard so many different, just similar to crypto, so many different, variations on what people define it as. But OpenSea was so interesting to us, and they started off their year last year with about 2 million in assets, 2 million in volume trading through their platform. They fast forward 6 months to June, they're doing 180 million in volume. Then you go 2 months later to August, and they do 3.5 billion. So you're looking at this and you're saying, wow, what this is just, the growth is just incredible in this space. And people are just learning about it. So you have so many people that are talking to you and they're saying, well, NFTs, I don't know. It's so shaky. I don't know. I don't even understand how to do it. And for us, we're looking at it as like, yeah, well, everybody's learning. There is a learning curve when it comes to this space. So we say, well, rather than getting involved in the NFTs themselves, which I'm sure you can do great if you pick, the right Bored Ape, you're going to be okay. But we'd rather get involved in the exchange. So we'll invest in the exchange. We'll go out and look for equity in the actual trading platform. And OpenSea is the largest NFT trading platform in the world. So to us, what are we able to buy them at? What are they going to be worth in the future? What's their revenue model look like? And when we can start figuring that out, there's potential for huge gains, I think. And that's a company that currently we don't have any inventory, because when it came through, everybody was like, okay, we want this one. So we know next time it's going to be at a higher price, going to be at a higher valuation. And we're going to be wanting to be involved, because that company is still a little ways out from a liquidity event, and it could be a year, it could be 2 years, could be 5 years, depends on how it goes. But we know that we feel that that's going to continue to grow. It's on pace. So we're willing to get involved.
What I like about your approach there is, you can try to figure out NFTs all you want and try to get investors to participate, but the marketplace, the exchange, right? It's in the gold rush, right? Everybody was trying to figure stuff out. Picks and
shovels. Yeah.
You got it.
Exactly.
And it diversifies the risk of the investors, because this NFT might fail, and if you put all your money in that, but this one's doing great. So it's like, here's a marketplace with major volume.
We're doing something similar with a company called Kraken in the crypto space. Kraken is an exchange basically for crypto. And, so for us, those things make sense. BitPay, which I think is going to be the new Apple Pay for crypto, is a company that is going to be used pretty widely. I know I'm just throwing out names here. Yeah. Plaid is a company that we got involved with over a year ago. Nobody knew who they were until they got the notification on their Robinhood account or their bank account saying, hey, we're using Plaid now to connect your bank to our platform.
Venmo transaction powered by Plaid. And I think there's a study that 1 in 4 Americans, or 1 out of every 4 Americans, uses Plaid, and most people don't even know what the company does.
So when you can find companies that are facilitating a huge amount of volume in certain areas, and they're the key pin to that working, and you can identify them, then it starts making sense. So now you say, okay, see this company, I see what they're doing. What can we access? What are we willing to pay for it? Can we get it done in time? Those are the things. That's how we do it. That's basically our formula.
Very cool. All right. So part of the show that I like is, I could come up with questions on my own, but instead I bought some questions on a deck. So what we'll do is we'll start with you, Mr. Mike. Tell me when to stop. We got
stop.
All right. So I'm going to ask you this question, and I have no clue. So it could be really exciting, or it could
be
really lame. I know, this is so cool.
Where did you get that deck of cards?
from the SEC. No. So if you didn't have to sleep every night, what would you do with that extra time? Mike, you first.
That's a very awesome question, and I was actually thinking about something very similar the other day. I'm very into hobbies, right? I've always had a lot of hobbies. I love working out. I love making music and playing music, and ever since I was about 8 years old, I've been playing guitar, drums, bass, piano. So if I had those extra 8 hours that I didn't need to sleep, I would be, holed off in my studio and just being creative all night, seeing what my mind wandering can lead me to. I've been very into making and creating music for a long time, so that would definitely be something that I would allocate more time to. We only get 24 hours a day. We sleep a third of them away, and work is long. We have other issues that come up throughout the day. So yeah, I definitely love more time to be creative.
Very cool. Now, Anthony, you could either answer that question or you get a new card. What do you want to do?
I think it'll be more interesting if I get the new card, although I would answer that question too. But let's go for the new card, just because I think it'll be fresh. Keep it fresh for everyone.
All right, tell me when to stop.
No whammies, stop.
All right, here we go.
That's a reference from the 90s. I don't know if you guys know that one.
What movie was that from?
That was a show called Press Your Luck, and they would just go around and they would say no whammies, and if they stopped on a whammy, they'd lose the game. So
Oh, gotcha. All right. Well, I didn't see that, but here's
I
the
just
question.
I just dated myself, but that's all right. You guys can figure it out from the bald head.
Oh, this is great. Oh, and then I read the whole thing. It's kind of dark, but here we go. Given an unlimited budget, how would you plan your own funeral?
Wow.
That's a twist.
Terrible, but great at the same time, right?
That's an interesting question. To be honest, I don't really need much when I die. I'd like for my children to be there, and then I would like to think that I'd have a few friends show up. And to be honest, I would want it to be more about. I would rather take the money and give it to. I know this is going to sound like I just won the Miss America pageant, but I'd rather like solve a problem like world hunger, like or something like that, or give it towards depression and anxiety, foundation, or help people with it. There's so many people that struggle from mental health, and I think it's such a big part of what we do here is to build the right mentality. I think I would want to donate most of that money, to be honest with you. I know that, like I said, I'm not looking to win the Miss America pageant with that answer, but I really don't want too much spent on my funeral. It's okay.
Yeah, I don't think you qualify for Miss America, but I do want to I do want to dig into your answer a little bit, right? So you said you would invest in maybe world hunger, but then you said maybe mindset and mental health. Why is that important to you, mental health and mindset?
I think that it's really important. I've been a coach very long, a long time, almost as long as you're alive. And you deal with so many people, and you see so many families, and I especially the youth. And I just think building a positive mindset with people, and helping them to believe in themselves and to set them on the right path is so strong. And I think that our country really is faced with a lot of mental issues right now. I mean, we've gone through a pandemic that, people have lost their jobs, and people have career changes, and they're seeing loved ones die. There's so many things going on. And I think that helping people in that area is something, that we all should really kind of do. I think that this world would be a lot better place if people would take care of each other instead of arguing all the time. And I know everybody has their differences, and I know that we have our differences of opinion, but I think mental health is so important. And I think so many people suffer from it. So many people suffer from it alone, without anybody knowing. And I think that I think it's something where we need to focus our energy as humans.
Man, I think that's really cool. Very intuitive of you as well, seeing that, and I honor that. I looked up, and we're running out of time, guys. So I only have a few more questions. So, Mike, here's a softball pitch for you. If someone's in the audience and, they got access to some equity, a private company, and maybe want to have a liquidity event pre-IPO and maybe engage your group, what's a good place or an investor on the flip side, accredited investor on the flip side, want to connect with you guys? What's a good place for people to connect and maybe do a deal with you?
So I'm very active on LinkedIn. My LinkedIn is just my name. It's Mike Classi, Classi. People ask me if that's a real name or not, and I have to tell them, yeah, it's my real name. But we're very active on there. That's where I go to look for a lot of people, especially in this pandemic age. It's a lot less face-to-face meetings with people. So you can shoot me a message and shoot me a request. And my email is in there as well. And I look forward to meeting whoever wants to have a conversation.
Cool. Now, what we'll do is both Anthony and Mike, you guys give me whatever contact information you want, and we'll put it in the show notes. So the audience could at any time go directly to the show notes, click on the show notes, and they'll be able to connect with you guys via LinkedIn or email, whatever you guys want, or to the website, whatever you guys prefer. Anthony, last question is, what question should I have asked you in this interview that maybe I screwed up and didn't ask you?
No, I think you did pretty well. I'm glad you didn't ask me where my barber is, or but no, I think that we got our message across, and I really appreciate having this time with you, and for the future viewers that are watching. I think that we're in a really cool space. I think that we're in something that it's worth talking about. It's interesting, and it's certainly worth considering. And we're happy to connect with everybody. We're happy to have conversations. We're not 9 to 5 guys, so to speak. We're open to conversations all the time. In fact, last night we watched the national championship game. We had fun with some friends, and then we were we're talking about what we do it all the time. So like,
Yeah.
around the clock. So I think we're likable guys. I like to think we're likable guys, and I think that we're in a really cool space. We're interesting, and we're just opening to connecting with everyone.
Sounds good. Well, thank you both for your time. Ladies and gentlemen in the audience, fellow deal makers, as always, reach out to our guests, say thank you, find a way to connect with them and do a deal if it makes sense. If you are working on a deal, looking for a deal, or want to talk about a deal here on the show, head on over to thedealscout.com. I'm the Deal Scout. Head on over there, fill out a quick form, maybe get you on the show next. Talk to you on the next episode. Bye, everybody.